Good morning, Predicted Trades family. Hope everybody's doing well. I just want to do a quick audio visual check. Make sure you guys can see my screen, hear my voice. Looks like it's coming through, but it was kind of giving me some like weird signals, but I think it's working now. Just making sure. And if we just take a quick look at yesterday. We can see that we opened on ES a little bit above the overnight open. So in that small gap up, we had a little pop up to the 1 hour squeeze top, the daily 15. That's when I started calling out puts. We rode that down to the squeeze bottom where the daily 21 was sitting, right near the overnight open level on ES. That's where we locked up those puts. It started to switch back into calls. Rode that up to the squeeze top right before FOMC, where we locked up profit on calls and got ready for the fireworks. Yesterday, the first reaction was up to this 41.56, 41.60, our destination sell zone. That's when we started hitting some puts back, right? And it kept trying to fight up there. But ultimately fell back and gave out VWAP for that late day rug pull. Right down to 41.08, right down to the previous day's low. And then after the bell, we had some earnings that got reported. We'll look at each of those names. Well, we'll look at the names on our list that reported earnings. That sent the market lower. Overnight, we opened at 40.87, very big key level. We dipped down to our open range buy zone at 40.80 and started an uptrend back up to 41.15, 41.20-ish up in our destination sell zone for today. I'm just reviewing with our tool, and I'm sorry, let me just go ahead and get rid of my drawing set so that we are mainly looking. Oh, I guess I still had a drawing there. Go to default. I'm pretty sure there's nothing there. There we go. Just so we can see our levels a little clearer. So, for my futures traders, or for those considering futures, you can see how these levels can start to help give you guidance overnight, right when the bell, or right when it opens at 6 p.m. A little dip below. Down, hit our open range buy zone, took back off. Above open, great spot to go long, with targets up above and stops at the last level that we held, right? If you'd have got in there, that would have got you, 40.87 up to 40.17. That's like 30 points up on ES. Boom, boom. And now we're fading back. Almost back to that open level. So at the very least today, that open level 40.87, our open range buy zone down at 40.80. That's the levels of support that we want to see hold for any chance of a recovery pop back up to overnight highs and where we closed. And if we could push anywhere past that, then it's up to the daily 21 above. But if we roll over and start to lose 40.80, then it will be down to the daily 50 below. We'll switch this up to our normal prep settings. And while we wait for that to load, hey, we're loading fast today. Look at that. Well, either way, I did want to, where is it going to be? It's going to be over here. Oh, I'm not going too far. There it is, the 410 put that we hit yesterday. I did want to review this just a little. to show folks how the system works and how we use it. And let me go ahead and turn this off. So, very simply, every day on your options charts, and if you're new to predicted trades, it's your first time watching, we provide a paid service that every day I give you a tool that you load on your charts. It works on options, futures, equity, even some internals. And it plots levels where there should be buying support, levels where there should be selling support, or selling resistance. So, basically support and resistance levels that are algorithmically calculated every day. And on options, it's kind of like having a little cheat because it shows you where support and resistance should be on an options chart, which is not very typical. I don't believe there's any other service out there that provides something like this, and ours provides these amazing buy levels. So most days we are just waiting for price action to interact with our buy levels on the exact strikes that we are interested in, that are within range, and then we are executing. So yesterday, the market popped up to that 1 hour squeeze top. These puts dipped down to our open range buy zone near $1. I called them out at $1.10 entry. They went from $1.10 up to the open level at $1.40, came back and tapped $1.10 one more time, allowing us to lock some profit and reload on the confirmation of the move starting to work. And we took those 110 up to 190 at our open range sell zone. That's when we exited the position and we wait for it to come back. It took all day to get back to our open range buy zone, and then we knew FOMC was coming, so I said let's be patient. We can likely pick them up down at Beast. And as you can see, we finally got a dip down to Beast, which was about 30 cents to 40 cents. Dips in to that range at about 40 cents, rips back up to $1, then dips back to that range and hits the bottom at around our bottom of the zone was 28 cents, low of day was 23 cents. 5 cents off. You can't really beat that. So, if you had orders ready, you could have hit this on the first bounce, and then if you had orders ready, pick it up again. Those went 30 cents, we'll call it, 25 cents, up to $2.25. Back up to our open range sell zone. So I just wanted to cover this with you folks again, especially with the newer folks, just so you can see that, on our options charts, we basically have two buy areas. So every day, I know folks are like, when are you getting in? What's your entry? I'm putting it on your charts every day. These are my pre-calculated levels that give me a statistical edge. So that's where I'm going to look for my entries. And a lot of folks say, do you just buy it right when it hits it? Do you buy it, wait for it to hit the bottom? No. It's a zone. And usually it's a small zone. This is like a 10-point spread on each of these zones. So there's plenty of times I pick it up at 40 cents. If it dips a little further and hits the bottom, I'll pick it up at 30 cents. And if it just gives out, then I cut it. And I have a small measured loss, right? Small loss. But if it gets, if it picks them up at 40 cents and then at 30 cents and then it gets back above 40 cents, my average is down at like 35, right? Right in the middle. So, when folks ask, where do you enter on this zone? Yes, you enter anywhere. And many times I am adding, a number of contracts, and I don't do it all at once. Pick up a little here, gets in a little further, pick up a little down here. Maybe it holds, and I add. And then as it starts to take off, I'm trimming, to pay for the position. But overall, one last thing, this contract worked great for us in the morning. And just because it started the trek back to buy zones doesn't mean you take it off your chart. If you kept this contract up all day, it provided 1 trade, 2 trades, 3 trades. Plenty of opportunity. So just wanted to review one of the trades we called out in the room yesterday that worked really well in the morning and in the afternoon. And yes, these levels are important all day. I can show you examples of when we fall through the buy zone and we don't think about it anymore because that option is usually on its way to death. Here's a great example. The 415 call. I think I called this out midday, around 55 cents. They did get up and hit $1. And then they ultimately came down to the buy zone, gave a couple of little bounces, and then died, right? So either way, let's get back to our prep. Back to ES. Here we go. So the recent sell-off took us down to 40.68. Our daily 50 sat down at 40.55 at the bottom of the daily squeeze. Now, after our bounce and staying in this range, that daily 50 has stepped up a little bit to 40.65 and right near that low. So ultimately today, it's can we hold up our overnight inventory, the top of this daily squeeze bottom, and start the bounce to recover back up? Or are we going to give out, make the trip down to that daily 50, this recent low, these key levels 40.60, 40.50, continued selling? Plain and simple. We are going to be opening likely right in the middle, 40.90, with the target trying to get back up to, call it 41.25, 41.30, daily 8, daily 21 sitting up there. Or we slip down to that 40.65, daily 50, and that recent low. And still, we are not giving up our bullish structure. I mean, we are seeing some selling. We saw some selling, and then we saw some strong buying, right? We've slipped into a daily squeeze, and they are tagging each end. Some could say that they're trying to kind of clear out the deck, clear out the stops, as we are kind of wedging tighter and tighter before the next big move. If we look on the daily, when we started this drive up to this recent high, I said we should be ready for pullbacks, and a pullback to the daily 50 and even to the daily 200 is still a bullish structure where we are setting higher lows, equal highs. I mean, we could go back even further and look. There are wicks that have hit this equal high. That's why we've been talking on every rally up. 41.80 is the target if you're swinging for, multiple days or weeks, right? And we arrived at 41.80 and we've been struggling, having pullbacks, popping right back up, pullbacks again. So, are we going to put in a double bottom, little W pattern right near this daily 50 and finally break through this wall in this ascending wedge? Or are we going to slip down, hit this daily 50, not saying this happens today, more like over the next couple of weeks, lose this daily 50 and start a journey, multiple day journey, down to the daily 200, which sits at 39.85, right below that big 4,000 level. So we're sitting on a shelf, the edge of a cliff, you could say. It could hold and keep us in this daily squeeze, or we start to slide off the edge of that cliff, fire the daily squeeze down into the daily 200, maybe even a little overswing, because we have room from that recent low down near, just call it 38.50 and 39.85. So we have a room for a little overswing and still establishing a higher low. Just wanted to look at the daily structure so we don't lose sight that we are still in a nice bullish trend. These are pullbacks to means and a bull flag. until it starts to give out. And giving out would be giving out this daily 50, firing this daily squeeze down. Just to scrunch our chart, it can show us that 200 sitting down there. And if you look at a day's journey, it's going to take a few days to get down there. We are at the beginning of May. There's the old adage of sell in May and go away. So there's a scenario for holding here, staying up in the range, and bulls trying to maintain control. There's this scenario for we have gone from the bottom of the range to the top, still can't get through. Earnings isn't helping. FOMC reaction isn't helping. But we aren't tanking just yet. Buyers keep buying dips, right? So there's a thesis for holding, squeeze bottom, coming right back up. There's a thesis for firing down, and we've got our targets to the downside. Let's look. I just want to see before I move on. Where's the third Keltner? Oh, is it just right below the daily 200? Oh, look at that. Let's zoom in real quick over here. Oh, just like I said. Perfect. So third Keltner to the downside. A good signal for being oversold. Sits just below that daily 200, right near 39.50. Right near the last time we tested the daily 200. So, we've got our scenario, folks, for today and the next couple of weeks. Or in the next week or two, right? Moving in to the rest of May. If it's a sell in May and go away, it's a slip down to this range. If it's going to be different this time around, it's going to be a hold up here and staying in the same range we've been in for a couple of weeks. Moving on, let's coming into open, we do have a 30-minute squeeze on ES, sitting at the bottom of it now. It's basically, can we hold there and start to see some pop first, running into this overnight downtrend and getting up to test squeeze top, or are we just going to slip to test the bottom and stay in a underselling pressure today? Moving on, NQ. And before I get too ahead of myself, let me just see if what we have on the economic calendar. We'll likely have our jobless claims at 8:30, like we do every week. So yeah, tons of labor data, jobless claims. Tomorrow, more of the same with a Fed speaker. And next week, the big ones to keep an eye on, CPI, PPI. Going to definitely give us some more volatility. So we'll see how the data drop goes for jobs data. We saw ES is down under the daily 21, and the daily 50 is within range for today. On NQ, a little different story, holding up well, holding up to that daily 21. So on NQ, it's all about the overnight low, the daily 21, this 1 hour squeeze bottom providing support. If we can hold there and start to reverse, then, its first goal is to get back over yesterday's close, back up to this daily 8, daily 15, these overnight highs, right near the lows before FOMC. And should we break above that 13,175, 13,200, then it's up to 250, 300, right back near yesterday's highs. Overall on NQ, this doesn't look to me like we gave out. More so, we've been riding high. We had our sell into FOMC, run back up, reject the same point, set a slightly lower low, and hold. So NQ looking a little better. Let's see if there's still continued strength in tech now that Apple and a couple other names have reported. So overall, can we hold this daily 21? near basically 13,100. If not, then and we lose this 1375, then we're likely coming down to 13,000, 12,950, the bottom of the daily squeeze around 12,900. Ready. Still remaining weak. Yesterday was looking good, though, in the morning and into FOMC, and then the reversal back. So let's see. We need to see the same kind of strength return to the ruddy today. I do like that we have a 2-day squeeze and a 1-day squeeze stacked right on top of each other here. 1720, 1710, 1700. Very big key levels that have to hold. Otherwise, we start to talk about the market ES firing to the downside on that daily squeeze back to the daily 200. So, looking for those 3 levels to hold. Want to see Ruddy get nice and strong back up to 1750 and above it today to provide some buying pressure to the market for, the upside potential. Otherwise, if Ruddy's just sitting down here and remaining weak and testing the levels I mentioned, it's not going to be helping the market to the upside. YM. Down to the bottom of its daily squeeze, that overnight low, getting right down to the daily 50. So, YM looking a little bit more like ES, down near the daily 50. Let's see if we can hold up today. We've pretty much got our overnight test. I'd say if we start to lose 33,325, then we are likely going to retest that daily 50 at 33,250, let's call it. But we are down at the bottom of a daily squeeze. Let's see if we can get some support. Let's see if buyers start to step in. If we can hold and get back above 33,400, then it's a play back up to overnight highs near 33,500, 33,550. If we can clear that back up to 33,700, where the daily 8, daily 21 sits, and 33,800, big key level near yesterday's highs. Moving on to Apple. Not the most favorable reaction. Well, oh no, wait, I'm sorry. Apple reports today. That's all FOMC. Oh, silly me. Apple reports today after the bell. So going to be very interesting. Going to be a huge nudge on the market, whether we hold up and get a reaction right back up so that that drop yesterday was more of just a reset for a big old dip buy, or are they going to give a negative reaction, start to send us lower, back down to 160, 155, big key levels. We'll have to see how that reaction goes after the bell. Overall for today, just going to be watching Apple as a gauge. It's back near the daily 21 and this 165 level. We're going to be opening at it, so I'm not going to be shy for a little dip. Overall, looking for 164 to hold. Overnight lows down near 162.75. Excuse me. So wouldn't be surprised for a little bit, but looking for 164 to try to hold, get us back up to 165 near the daily mean, near this 165, 166, where we sat a lot in the last few weeks going into earnings. So going to keep an eye on it because, if it is going to slip to try to get that pre-market low, going to add a lot of selling pressure to the market. But we've got a wide range to work with today going into earnings. Moving on, let's go to AMD. So we have made it back to 81 and 80. I know this is riddled with levels, so I'm just going to get rid of these. But 80, 81 key levels. Let's see if it can hold up there. Obviously a negative reaction to earnings. So we want to take caution, but not the worst reaction, let's say. We didn't go outside of third Keltner. I think if you go look at, Tesla, it dropped outside of third Keltner and stayed there and went a little lower. AMD is now just arriving at where third Keltner was before earnings. We do have the daily 200 sitting just below. So very simply, let's see if we can hold 81. If we start to lose that, it's down to 80 and then a 79 where the daily 21 sits, 78.5 where the third Keltner, the downside, sits. It's making a zone as a target. Should we start to give out 81, you play down to there. If we can hold even that daily 200 and get back above 80, 81, then I'd be playing for a push back up to, it's basically every dollar on your way back up through the daily Keltners, back up to 85, 87.5, 88.5, 89, right? But we'll have to see if AMD needs a break. Negative reaction on earnings isn't the best. I feel like it was a beat, though, at least. Yeah, it was a beat. So, we'll see. Sometimes, they just drop it because of what the market's doing, because it's been on a good run. They're taking a little profit, getting ready for the next load up. So, we'll see. Amazon, still holding up well. Had that big old reaction to earnings. Just came back down near recent lows and is on a little ramp back up. I would mark this little trend line like that. As long as this trend line can continue to hold today, let's zoom in a little bit to get rid of this big old candle. There we go. If this trend line can continue to hold today, basically trying to hold near that overnight low, 103, I can accept a little slip and back above. But basically 103, 103 and a half, looking for that to be a support if we do have a little dip. And if we can start to take off through 104 and a half, kind of the pre-market highs that we're near, it's a play back to 105, 106, 106.8 where the daily 200 sits. And then up to the daily squeeze top near 108, 109, 110. But if we start to give out that trend line of support and this 103 level pre-market low, then it will be a play back to 102, 101, 100, and the daily 50 down below at 93.5, daily squeeze bottom near 99, 98.5. Moving on, Google. Ugh. If it's one thing I don't enjoy, come on, there we go. It's a wedge after earnings. Hey, come on, take that. There we go. So, working into this wedge tighter and tighter after earnings, daily squeeze. We're in a tight range, right? Big key level below, it's 103. Big key level above, 107.5. The daily 21 sits at 105. I mean, it's cutting right in the middle of these key levels. So, very simply, we have a lot of stacked squeezes sitting right near 105. If we get a little dip to 105, we've got a lot of support. Might be a good spot to go long, unless the market isn't showing signs like it's going to keep selling. But overall, if we can hold this 105, bottom of the 4-hour, 1-hour, 2-hour, yada yada, even down to 104, because that's actually where the 4-hour sits. Oh, no, that's a 2-hour. 4-hour sits above. So, 104, 105, looking for these to hold as long as they can. We can start that fight back up to 107.5, 108, 110, right? We start to give these out, then it'll be down to that 103, 102.5. Come on. Sorry, 103, 101, where the daily 200 and daily 50 sit just below that 101, and that psych level 100 all in the bottom of the daily squeeze. Meta. Still holding up this flag. We even had some news yesterday on Meta about some FTC BS that was sent it down hard in one candle. But that 235 is what we need to be watching. It's that post-earnings, little low, cash session post-earnings low around 235 is what we're holding up. There's even this little dip around 231 where the daily 8 now sits. I saw in some other rooms the second that this breached 235, everybody was like, short, 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 and then it just wicked down and right back above 235 and held. So they definitely trapped some shorts outside of this squeeze. So overall on Meta, let's see if they want to dip it down to the squeeze bottom one more time for a test, looking for that 235, 236 to hold as long as it can. Then it's still a play back up to 240, 242, 244, 45. And if we start to give out that 235, 236, we know we are going down to that daily 8, 231. That little dip after the earnings pop. Now, if that starts to give out in 230, then we're talking a reversion back to the mean, the daily 21 down at 221.5. On to Microsoft. Another example, great reaction on earnings, sitting up between second and third Keltner. Squeeze is getting tight, tight, tight. Overall, looking for us to try to hold this 303.2 in the bottom of all these squeezes. If we hold that, then it's a play back up through 305 to 307.5, 310, and I'm sorry, let me just zoom in here like this. There we go. So if we can hold, then it's a play back up to that 307, 308, 310. If we start to give out 303.2, then it'll be a play down to 300, where the daily 8 sits. That would be firing these squeezes to the downside. Really, we could even slip to this daily 8, get back above the squeeze bottoms, and they stay intact. It is a scenario that can happen. But barring the squeeze cloud support, these can always fire to the downside. It's a tight, tight range, folks. You play the range till it breaks. Meaning there's big money out there that when it gets up here, they're shorting. And when it gets down here, they're going long, back and forth until this range breaks. They're building position in each direction. And when they finally get a true break out of the range, they'll cut the runners that they have on the losing side. So if we start to give out that 303, then it's down to each of those dollars to 300, where the daily 8 sits. Should that start to give out, it'll spell a bigger drop down to like a 295, 293, where the daily 15 sits. Daily 21 near 292, and big key level 290.57. Should we see more selling in the next couple of weeks? Netflix. Man, they are having fun with Netflix. Rip it up, dump it down again. Rip it up. Even yesterday held up pretty darn well. Overall, I've been talking about this 315, 316 as kind of our support. That still remains true. I'd also say 318 is another potential level of support. So holding in any of the, let's see if we can hold 318. If we start to lose that, it's back to 316, 315 for tests. But if we can hold up, basically it'd be a playback through 320, 322, where the daily 50 sits, daily 8, 323.5, daily 21, daily 15 sitting up at 327, 328-ish. As upside targets if NVIDIA can get going again. I'm sorry, if Netflix can get going again. NVIDIA on a little, had that nice pop the other day, been fading back, but not really tanking and holding right near the bottom of where that pop happened. Overall today, let's see if we can hold yesterday's lows down near 275 at the bottom of the squeeze. If we start to slip those, the daily 15 down at 273.5, the daily 21 at 272.5 could still provide support. If we slip a little bit outside of the squeeze, want those to hold up, we could get back above and still stay intact. Below 272, we're finding that squeeze, and we want to target back down to recent lows near 262 in the daily 50 near 259-ish. But if we can hold up the daily 21, this hourly squeeze bottom, and start to reverse, it's a play back up through 278 to 280, 282, 285 and a quarter, 290. And NVIDIA doesn't report till like the end of May, so we got plenty of time there. QQQ. Pulling back to this 316 and a quarter, very key level. It was some resistance before. We've gotten back through it. It provided support Monday at the lows. Oh, I'm sorry. That's a slightly higher level, isn't it? Overall, let's see if this 316 and a quarter, 316, overnight low, daily 21, all sitting there. Let's see if that can hold on any retest. We've got an hourly squeeze bottom as well, as long as those can hold. Going to be trying along to get back up to 318-ish, 318.5 where the daily 8 sits, 319 where the overnight high sits. If we can get through that, up to 320, 321 at the top of the hourly squeeze. We start to give out that 316 overnight low. Then it'll be a play down to 315, 314. And my next big key zone is down near 312, 311.5 down at the bottom of the daily squeeze. SPY. A daily squeeze bottom, right near where our recent lows were. Daily 50 still sitting a hair below those lows. So very much like ES, right? Overall, can we try to hold around 406 today? If that gives out, then it's down to 405. So it's basically, can we hold 405, 406? Should those start to give out, then it will likely be a drop down to 403, 402, 75, where the daily 50 sits in the bottom of this daily squeeze. If we can hold, though, it's a play back up through 408, 409, 410. And if we get going anymore, the daily 8 sits at 411, the daily 15 at 412. Yesterday's highs got near that 414. Tesla was very strong in the morning, and then obviously FOMC brought it back, but still gapping up. So, tide might be changing a little bit on Tesla. Overall, though, closed at 160.5. So looking for 160, 160.5 to hold on any dips. To try to repeat that run up from yesterday to get up to 166, 167.5 up in these squeeze tops. But if we start to lose 160, then it'll be a play right back down to 158 to this zone that you could say is a little bit of an inverse head and shoulders. We've had some bounces at the zone, slipped through it for a day, got back up above it, and now we're holding it. So, and we've got our squeeze bottoms there as well. So if we lose 160, it's down to squeeze bottoms and for them to try to load long back up. Should that start to give out, then it's back to recent lows near 152, 150. And finally, VIX. Yesterday I talked about we want to see VIX get below 17.5 and start making the trip to 17. It only got below 17.5 a little bit and hit the daily 15, daily 8, and then reversed back up to this high. I talked about yesterday for downside scenarios. If we just held 17.5 and above 17, these daily MAs, we could get a push back up to test these highs. Well, here we are. So overall on VIX, if we are going to see more selling today, like, we have a little pop and then start to drop to retest lows in that 40-80 on ES, then we'll likely see VIX stay above 19, get up to this 19.8, 20, and start to push into this daily squeeze top. That's if we remain weak on the market and do make the trip down to the daily 50, right? But, and it's very interesting how if you look at ES a couple of days ago, we almost got to the daily 50 and then we get bounced. Just like on VIX, we almost got to the daily 50 and rejected back down. Now we're approaching it again. So if there's more selling on the market that gets us to the daily 50, VIX will get up to its daily 50 and up to the squeeze top. But if we can find some support, we don't need to revisit the daily 50 on ES, and we can see a push back up to recover that FOMC drop. Then we should see VIX hopefully reject around this 19.5, or at this daily 50, 1985, this psych level 20. We could have a little dip, test those pre-market lows on ES, and then start to rally. That would look like VIX having a little pop up here. Overall, want to see it reject, get back below 19. That will signal a nice upside. In fact, let's go ahead. Come on. I'm at the end of prep. Don't freeze on me. Basically, I was going to say I'm going to place a little alert here at 19. Should we start to lose that with some strength, that will signal a better upside. And I'm probably going to throw an alert at 19.5. If we start to break above that, that should signal more of a dip to retest overnight lows. Create an alert. Come on. There we go. I'll take care of the other alert later, but keep an eye on VIX. We're going to be opening between 19.5 and 19. Whichever one breaks first is going to give us a good indication for further selling or a nice bounce to try to recover on the market. So that's it for prep today. Thank you all for tuning in. It is a free Thursday, so if you're new to predicted trades, there's a link in the description of this video. You can join our Discord server for free, and every Thursday, it's a free Thursday. You can test out our tech on your options charts, just like that 410 put that I reviewed at the beginning of prep. So definitely come in and join us. Test out our tech on your options charts so you can see the edge it gives us before you sign up. Thanks for tuning in. Hope everybody found this prep helpful, and we'll see everybody in the chat today.